Ultra Algo, and today we are going to be introducing options trading for equities directly within the Ultra Algo platform. So Ultra Algo platform offers equities tradings, options, ETFs, as well as Forex. We offer the data in real time. It's included in our package, and all of our programs are powered by artificial intelligence, which is a combination of machine learning, genetic algorithms, and optimizing the data that's coming in from exchanges in real time. We've been in global markets for around 2 years, but we've been working with hedge funds and banks for over 20 years at this point. And today we're going to be introducing our latest offering. So this is our standard trading UI, which shows you our standard signals, which are buy and short signals. These are generated with a combination of 15 indicators, and we have the ability to optimize the signal. So this is demonstrating a buy signal indicates a bullish pattern, a short signal indicates a bearish pattern. At the top, you actually see the back test, so this shows you the profitability, and this is how much you would have generated across all these trades with a certain period of time, which is the days back. Those are trading days. The amount of trades executed, it says 18B9, which is 9 buy trades, and S9, which is 9 short trades. Profitability, which is 73.33, profit factor of 2.3, and some additional information around this specific security, which is Microsoft. This is the real-time price on the right. We have market depth level 2. We also have a predictive algorithm on the right, which actually predicts the price movements for the security. And on the in the middle of the chart, this is actually your profits generated. So here you can see it says $911, and on the top, and so you can see if overall the pattern of the trading signals are matching the overall pattern of the chart. So in order to find the best pattern overall, all you have to do is click on this optimize button, and what it does is it uses the artificial intelligence mechanisms that we have in place, and you can see it loading on the top of the screen. And what it's going to do is it's going to try and find a better profitability right now. Click here to update, and it updates, and here it found a profitability of 80%. It also increased the profit significantly. And you can see that what you're looking for are these golden steps where the your win rate is consistently increasing, and so are your profits. Now, let's go directly into the options data. So we have a couple of different ways that you can view the options data, which is by open interest, put call ratio and volume, put call ratio and open interest, as well as put call ratio with both of these mechanisms together. And we're going to go through an explanation of what each one of these mean. And if I toggle back and forth between them, you can actually see what happens. So the open interest, if you think of it as a low ratio, indicates a bullish pattern. So you would select one expiry based on open interest, which is OI, which determines the level of activity. If the activity is stronger with call options, OI tends to indicate traders' interest in buying a bullish sentiment. So if it's stronger with puts, it may be thought as a bearish sentiment. Open interest is a way of measuring how many people are involved in buying or selling a certain product, like a toy or stock. It's kind of like counting how many people are playing with the toy at the same time. Imagine that you and your friends are playing with toy cars. If one of your friends gets a new toy car and joins the game, the number of toy cars being played with, let's call it open interest, has increased. If one of your friends leaves the game and takes their toy car with them, the number of toy cars being played with, open interest, has decreased. So in the same way, when people buy or sell a stock, it affects the open interest in that stock. If more people start buying or selling a stock, the open interest goes up. If fewer people start buying or selling a stock, the open interest goes down. So open interest is a way of keeping track of how many people are interested in a certain stock or product, and it can be helpful in understanding how the market is moving. And you're going to use that in combination with these signals, with these buy and short signals, to really understand, is it a good time to buy or not, right? And now we're going to use that in combination with other things, other elements that we have in place, right? So if we click on the PCR volume or the PCR OI, open interest, it's similar. So the PCR OI and the PCR volume is, it shows the market sentiment. So if confirmed with other parameters, just as these buy and short signals, a low ratio tends to indicate a bullish sentiment. A high ratio indicates a tendency for bearishness. And you can see right now the ratio is very high, and you see what's happening in the market. The put-call ratio is a way to measure the number of people who are buying or selling a certain product. And again, it's like a toy or a stock. It's like counting the number of people playing with different toys in a playroom. So it's just as the same combination that I mentioned earlier, but in the same way, when people buy or sell a stock, they can either buy a call option or a put option. A call option is like buying a toy car, and a put option is like buying a toy plane. By counting the number of call options and put options being bought or sold, we can calculate the put to call ratio for a stock. The put call ratio really helps us understand how many people are buying or selling a stock and what they might expect to happen with that stock price. If more people are buying call options like toy cars, it might mean they think the stock price will go up. If more people are buying put options like toy planes, it might mean that they think that the stock price will go down. And this is where we're going to get into our next point, which is maximum pain. So here the stock price is 258, and you can actually see at the bottom of this chart, it shows you a couple of different numbers. So it says 265, 265, 260, 260, 250. And if you go all the way to the end of the chart, it says 235. So that's what the expected price is going to be. So let me explain what maximum pain is. Maximum pain is the expected price at the expiration date. So you can actually see the dates that this relates to over here at the very end of the chart. It's just the 23rd of the 9th of the 15th. So that's a couple of months from now. But at the start of the chart, you see it says 23/02/17, which is actually today. So again, going back into it, if a maximum pain is greater than the current stock price, it is expected that the stock will rise, the bullish stock. Otherwise, if it is less than the stock price, the strike price, it suggests that the stock is expected to fall, so it's going to be a bearish. Maximum pain is a term used in the stock market to describe what might happen with the price of a stock. Imagine you and your friends are playing with toy cars, and you want to see who will end up with the best toy car at the end of the game. To make the game more interesting, you decide to give some points to the person with the best toy car and take some points away from the person who has the worst toy car. This is like the stock market, where people make money when the price of the stock goes up, but lose money when the price goes down. In the stock market, the idea of maximum pain is that the stock price will end up in the place where it will cause the most pain for the people who bought the stock. So as an example, if the stock price goes up too much, the people who bought the stock will miss out on a chance to make more money. If the stock price goes down too much, the people who bought the stock will lose money. The idea of maximum pain, and this is why it's so unique, helps people understand what might happen with the stock price and make decisions about buying or selling the stock. It's like trying to figure out what toy car you should buy so you don't end up with the worst toy car at the end of the game. So that's, again, that's options data in a nutshell and how we present it. Again, this is all for the future, so you have an idea, that combination of how you have these signals, what the predictive algorithms telling you, what the optimizer signals are telling you. And by the way, these white markers that you see on the screen indicate institutional trades. So it means that institutions are coming in and they're pushing the price down. Very interesting when you match this data up with what you're seeing across the put-call ratio as well as the open interest. Thanks for joining our session. If you're interested in trying a free trial, go to ultraalgo.com. And again, what we offer is a 7-day free trial for you to go in, get access to real-time data. We also have integrations with major brokers like Interactive Brokers, ThinkorSwim, TradeStation, Trade-of-8, as well as quite a few others. So you have the ability to actually execute trades directly from our platform. Again, start a free trial at ultraalgo.com. Thank you very much for your time.